Be honest. Do you feel stuck in your home? Your family's growing, you don't have enough space inside or out, and you're looking for a change. And every year it feels like this problem is getting worse. If you're a homeowner feeling trapped by your 2 or 3% mortgage rate, you're not alone. While it is true the rates are up and home prices have soared, there's one huge financial pressure valve that just opened up for move-up buyers. But if you misunderstand it, you can miss it completely. So if you stay to the end of this video, I'll walk you through 4 things. First, what the break actually is. Second, who it helps and who it doesn't. Third, how much savings are we really talking about? And fourth, how to tell if you're actually getting it or leaving money on the table. Because knowing the name of the break isn't enough. What matters is whether it's actually working for you. If we haven't met yet, my name's Jason Harris. I'm a Central Ohio mortgage professional. I've worked with thousands of buyers over the years. My goal is to help find the perfect mortgage solution for your budget and help you understand the numbers behind it. What this break actually is, it's the SALT tax deduction. What does SALT stand for? State and local income taxes. You also get to deduct property taxes. We haven't been able to do this since 2017. A recent change in the new tax bill is going to allow most homeowners to deduct 100% of their state, local, and property taxes. The problem is there's been a cap on those deductions since 2017. Everybody was limited to $10,000 in total deductions. The cap has been raised. This was a big deal in the tax law we saw passed last year. It's been raised to $40,000. It's not a tax credit. It's a deduction, so it reduces the amount of your income that you'll end up paying taxes. As a deduction, this won't mean you're getting a check. What it will do is mean that you're going to pay less taxes on the money that you actually earn. When does this matter most? Think about higher income earners. If you're paying a lot of state income tax, here in Ohio, that's around 5%. If you're paying the local income tax, usually around 2.5% of your income, the higher your income is, the more significant these deductions are going to be. As far as who it's going to help most, if you're in that 2 or 3% mortgage and you're thinking about a new home purchase at today's rates, the deduction is going to benefit you a ton. Who it helps and who it doesn't. In terms of who this is really going to benefit, it's going to be your higher income households. If you're in a dual income household, if you've purchased in the last 3 years at today's higher interest rates, especially if you're a move-up buyer thinking about trading in a lower rate mortgage, the SALT tax deduction is going to mean a ton of savings for you. Who it doesn't help as much is going to be your low. Or if you've got one of those interest rates and you're comfortable in your home and you don't plan on moving for a while, you may receive some benefit, but nowhere near as much. How much savings are we really talking about? When someone moves up, a few things happen. If you purchase a home at today's interest rates and you're comparing that to your 2 or 3% mortgage, your mortgage interest cost is going to increase. If you're buying a larger home, especially if you're moving from the city into the suburbs, oftentimes your property taxes are going to increase as well. The good news, though, is those items are going to increase your SALT tax exposure, your deduction exposure. When someone moves into a larger home, a few things are going to happen. Your mortgage interest cost, if you have a 2 or 3% rate and you purchase at today's rates, your mortgage interest is going to increase. Your property taxes, if you're moving from the city to the suburbs, those are also going to increase. With that, your SALT deduction exposure increases. What does that mean? As your interest increases, it's going to increase your deductions. As your property tax increases, it's going to increase your deductions. As your state and local income are now fully deductible, that's going to increase your deductions as well. So someone who's at a 2 or 3% mortgage may be receiving, $20,000 or $30,000 a year in deductions. That same person that purchases a move-up home, they may expand those deductions from $30,000 to $60,000. This additional deduction is going to reduce your taxes that you owe. In many cases, those savings are going to be many hundreds of dollars on a monthly basis, or even in some cases over $1,000 a month. So as you think about trading in that low interest rate to move up on the higher payment, just know you're going to get tax savings, $500, $800, $1,000 or more, that'll help with making that move to the higher payment. Before this tax law changed, 90% of homeowners took what's called the standard deduction. This limited your deductions to right around $30,000 a year. As you move up and based on these changes in the tax law, you're going to be itemizing your deductions in the future. These additional deductions are what's going to produce all of that savings. With the $40,000 SALT cap, many or even most households can now deduct all of their state, local, and property taxes. For higher income buyers, that can mean tens of thousands of dollars more in deductions. At higher marginal tax rates, that translates into 5 figures per year in tax savings. On a monthly basis, that can offset hundreds or even over $1,000 on the higher payment. And lastly, how to tell if you're actually getting it. If you work with a tax preparer, if you do taxes on your own, think about, am I itemizing? It's really important for people that have purchased in the last 3 years where their interest rate's in that 5, 6, 7% range. Determine if this year, 2025, is going to be your year to itemize. If you're itemizing your deductions, you're going to get the benefit. Historically, the standard deduction has been capped at $30,000. This year, you'll be able to itemize, and that's how you'll know you're taking the deduction. If you're still taking the standard deduction, you may not be benefiting at all. Here's what I see often. Many homeowners assume the tax break is helping them without even checking. The best way to do it is put a plan in place. If you've purchased a home in the last 3 years, have a conversation with a tax professional about the changes in the tax law. If you're thinking about a new property, let's talk about home price, down payment. Let's consider your tax planning when we look at the numbers for your new home. I'll be able to help show you exactly what that savings is going to look like. If you still have questions about the SALT tax, reach out anytime. We're happy to help you understand the numbers and to make sure this benefit's working for you.